Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday the 17th of June. And the FTSE basically where it was at the end of last week. We've had a little fader at the 50-day moving average around 81.80. Want to see an end of day close back above that. Otherwise, there's the risk of a move down to early April resistance around 80.40. And below that, obviously, then we could really have a big top in place for this market. But at the moment, 80.40 was where we fear this market may go. If we're really lucky, we'll hold the floor of that channel, as we're just about doing at the moment, the one from January, and have an end-of-day close above the 50-day line to 81.80, and then go back to 8300. But obviously, given the political backdrop, it's hard to imagine who would be enthusiastic enough to go long of UK stocks at the moment. Moving on to the DAX, and here, not much better, actually. Probably, in fact, in a way, a bit worse. We've got a falling 50-day line there from the near the highs, and basically below that 50-day line, 18,300. We have the risk of a test of the April support area down towards 17,700. RSI at 38, so not really into the oversold area yet, so maybe a day or two more of downside, or at least downside testing before this market can recover. Really need to see an end of day close back above the 50-day line to give us or get us back on track for a move towards the highs at 18,800 plus. The Dow is next, and here you can see that we managed to bounce off that uptrend line from back in October. Obviously, we had to widen that a bit over recent weeks and months, but the nominal level there around 38,500 and above that, looking for a break of 39,000 to take us back to 40,000. If we do break down, not expecting now anything worse than the old April support area at 37,700. RSI is slightly concerning in the sense that along with the 50-day moving average providing resistance, we've had resistance at the neutral 50 level in the RSI window, which tends to be a leading indicator on the downside, which means Friday's move was all the more impressive. Bitcoin is next, and after about a week to 10 days, you're still seeing this market struggling to hold the floor of that rising trend channel from November. The floor there around the 65,000 level. We want to see a clearance of the 50-day line, 66,000, to take us back up to that March resistance line at 72,000. Until that happens, then the prospect of moving up within that rising trend channel towards 85 to 90,000 seems relatively obscure. In fact, the way that we've got failures below RSI 50 suggests that we might have to roll over down towards the area of the 200-day line there at 57,000, which until a few days ago was unthinkable. Moving along to gold, and here you can see that we've got this rising trend channel still in place. The floor of the channel there around 2280, which was the May support rather, and looking for this market to close above the 50-day line at 2360 and then break that May resistance line near 2380, but still in consolidation mode after what's effectively a triple top there through 2400. If we do break back below 2280, then the risk is for a move towards 2250, which was the March resistance on the way up, and we can't actually rule out 2200, the late March support and early March resistance there. Moving on to the stocks, and Contango has its big day today after many months and years of stalling. We have a bear trap island reversal, so gapping down to new lows and then gapping up today. Ideally, we stay above recent resistance around the 1 penny level, and above that we could get up to as high as 2.5 pence, but obviously it's just 1 day into the turnaround, so apart from that bear trap island reversal, we are basically flying blind, as I suppose we always are with small caps in that kind of way. But you can see that this market did actually break that trend line there from back in November a few days ago, so maybe one or two people sniffed that a change was coming. See that there, and actually the 50-day line starting to turn higher. So ideally we don't go much below the 1 penny level, as I said, even on the retracement, and then head up to 2.5 pence perhaps as soon as the end of next month. Cizzle's been on the back foot basically since it came to market, and that could, well, may not change. But today's news with the The visibility on $2.3 million over the next 30 months could be a help. What we really like to see here is an end of day close back above April-May support around 1.65 to then give us a chance of a move towards the 200-day moving average at 2 pence. If you're fussy, wait for at least an end of day close above the 50-day line as well, which is just above the old April-May support. Next up is Eurasia, which had a little spike higher today. We had our level there at around 3.1 pence. In fact, we went a bit higher than that, 3.35. But the main thing, as I said yesterday, is we hold above the 2.3 pence resistance. Then we have the chance of 3.1 and then 4.7. Ideally, an end of day close above 3.1 pence would then allow 4.7 pence to be delivered. Next thing to look out for is whether we are heading into a golden cross, whether that 200-day line there, which is currently flat, may in fact be rising. It's difficult to see at this stage. If we have that, a golden cross, then maybe we could get that retest of the 7 pence plus area sometime next month. But the key here, I think at the moment, is holding 2.3 and avoiding another retest of the 200-day line, 1.95. Eco building seems to be progressing, and brick by brick, I think here we've had a gap through our initial target there around 12.5 pence, and while we're above that, looking for up to 16 3/4 by the end of this month. The way things are going, we've got the 50-day line now rising, and we've shuffled above it as well. So that gap to the upside does suggest that 16 3/4 is fairly well nailed on for the end of this month. Don't want to see the stock back below 12 pence, basically the floor of the gap. EQTEC is next. I interviewed the company a few weeks ago, and it looks as though maybe people are thinking more positively about the stock now. Here you can see that we've gapped up off the lows after gapping down from the 50-day moving average, so it's an island reversal, and the longer we stay above the floor of the gap there around 1.2 pence, the greater the chance of a retest of May resistance through 2 pence by the end of next month. Inspiration Healthcare is a stock which I think nobody looks at, but it happens here just because we've had the 2 gaps down and then broken that falling wedge as we were expecting or suspecting, and above the 50-day line looking for the 200-day moving average at 35 pence by the end of this month, which would mark quite a turnaround and a gap close buy signal as well. Helium 1 has done us proud as well. The shares managing to bounce off the placing price at basically the first attempt. We were looking for 0.8.9 and the high today 0.835, so I suppose that's not too bad. Current situation is we just need the shares to hold above 0.7, basically the initial resistance after the placing, and above that we could potentially fill the gap up to a penny by the end of this month, which really would be quite an achievement given the way that the company raised £8 million. Moving on to Landore, and here a situation where we've got the weight of that 200-day line there around 4.5 pence, and the shares today bouncing off that. We haven't been above the 200-day line properly since the beginning of 2022, which is a bit like the situation at Eurasia, so this does look significant. So the longer, while there's no end of day close back below 4.5 pence on the 200-day line, we've got the chance of hitting the upper parallel of the rising trend channel from back in December as high as 7.5 pence by the end of next month. Next contender is Longboat, which has a reasonable looking chart. We've got a W-shaped turnaround there. We've gapped off, we've gapped higher today, broken the middle of the W there at 7.9 pence above that. Looking for the shares to potentially head back towards the October support there on the 50-day moving average at 15 pence. Might even happen by the end of this month while we're above that, the middle of the W there at 8 pence, above 8, looking for 15 on Landore over the next 6 weeks or so. Seems to be Mosman mania at the moment, and here you can see why. We've had a very extended turnaround. It's taken nearly a year for the oil tanker to turn around, if that makes any sense. The view here, and it's still the same as the one we've had for recent days, is that above 0.33, a previous target, we're looking for 0.47, and the upper parallel of that rising trend channel from back in September. That July resistance line projection, the red bond there, hopefully something which could be hit well before the end of this month, but the key here is holding 0.33. MetalNRG rose on good news, and it hadn't been factored in, it would seem, so that is good news. Here you can see that we've hit well, a third target there, 0.21. Above that, we're looking for a fourth target as high as 0.28 by the end of this month. The Cizzle here provided, by the way, we had that massive gap to the upside back in May, and it was never filled, so that's looking pretty strong there. And the upside here about it while we hold above 18.5, which was the old May resistance. Above that, looking for 0.28. Stock that you don't normally see talked about at all is Northcoders, but here the situation is that it looks as though we've got a rising trend channel base. We've also had a gap higher after the gap down, so that's a bear trap on reversal. So it looks as though this is going to be turning around for good, which is a punchy call, obviously. But above 160 and initial 2024 resistance, in fact, it's 162. The April resistance there, above 162, looking for up to £2.25 by the end of next month or even sooner. It was a close run thing in terms of Raspberry Pi holding on to support after the spike that we had on Friday. We were hoping for the shares to remain above £4.20 and then head towards the top of that rising trend channel. We've got the 530, 540. That's slightly more moderated now after the pullback, but while there's no end of day close back below 420, we are still looking for a £5 plus target by the end of next month. But very volatile, so maybe some people would just prefer to wait for any dips below 400 if we get them. Superdry is next, and here it was mentioned that I didn't cover the shares on Friday or over the weekend. The reason for that is that the shares are due to delist on July the 11th, so I thought, well, maybe there's not much time, but obviously if a week is a long time in politics, then it may also be a long time for the small cap area as well. We're above the 50-day line there at around 6.5 pence, and the longer we stay above that, the greater the chance of a final flourish towards 14 pence in the top of that April broadening triangle from earlier this year, and we could see that obviously by July the 11th. The other point to note, I suppose, in these situations is that for some reason when a company delists, there's a massive rally in the shares. I presume that's all the shorters getting out of the stock, which is obviously very sensible. Finishing off with Sound Energy, and here we hit our first target for blink and you missed it basis, but ideally while we're above the top of the gap there at 0.9, the shares could not only head up to 1.25 again, but best case by the end of next month up to 1.65 in the upper parallel of that rising trend channel from back in September. That's it for me today. More updates tomorrow.